Hello everyone, Professor Christensen here. This is the second video where we're going to be talking about accounts receivable and the allowance for uncollectible accounts and how we account for those situations where we believe our customers are not going to pay us. So see video 1 for the background. Here's a little review. Remember that we said that at the end of every year, when you're using the allowance method, you have to make an adjusting entry to bring your allowance up to the amount that you want it to be. Okay? And we do that by debiting bad debt expense and crediting the allowance for uncollectible accounts. Now, how do we figure out the amount of the entry? That's really what we're going to be talking about today. So in order to find the balance, remember what we do. We take your accounts receivable, multiply it by the percentage that we believe is going to be uncollectible. We compare that to what's currently in the allowance, and that gives us the amount of our adjusting entry. Remember we said if you have a credit balance, you're going to subtract. If you have a debit balance, you're going to add, and we're going to see why in a minute. Okay, then we prepare the adjusting entry, and our final balance in our allowance, it goes on our balance sheet. It's a contra asset account. It reduces our accounts receivable down to net realizable value, the amount that we actually expect to collect. Okay? All right, so last time we went through these journal entries. I'm just going to skip over those, and today we're going to talk about the finding the amount to prepare that adjusting entry, the amount of the adjusting entry. Okay? All right, so let's see what we have. We have a company preparing its financial statements as of December 31st. Remember, this is all done at the end of the reporting period. So at that day, the accounts receivable has a balance of $500,000, and the company uses percentage of receivables method, estimating that 2.5% of its receivables are going to be uncollectible. Okay, so it's saying assume that the allowance for uncollectible accounts has a credit balance of $1,000 at December 31st. So if you go back to the other video, if it has a credit balance before adjustment at the end of the year, that means that last year we estimated more than we wrote off. Okay? All right. So first thing we want to do is find the required balance in the allowance. Okay, so that is how much do we think is actually not going to be collectible. So what we're saying here is the receivables have a balance of $500,000, and they estimate that 2.5% of the receivables will be uncollectible. All right, so the required balance is $500,000, which is our receivables, times 2.5%. Okay, and that's going to give us $12,500. Okay, so what we're saying is we want $12,500 in our allowance at the end of the year when we're all done. All right, what is our current balance? Well, we just said our current balance is $1,000 credit balance. Now we have to figure out the amount of the adjusting entry. Remember, our allowance is going to be a credit because it's a contra asset account. All right, now we have to figure out how much we need to debit or credit. Let's take a look at this in a T account. I always like to use T accounts. So this is what we have now. We have, right, a $1,000 balance in our allowance. We want, what did we say we want? We want $12,500. Okay? We have 1,000 and we want 12,005. Okay, so what do we have to do? Our adjustment has to bring our account from what we have to what we want. So our adjustment is going to be $11,500. Now, if you're not sure, after you figure out the amount, go back and add or subtract and make sure it's going where you want it to go. So we have 1,000. Remember, when you have two amounts on the same side of the T account, you're going to add them. 1,000 plus 11,500 gives us the 12,005 that we want to have at the end of the year. So our adjustment is 11,005. Okay? All right, so let's go back here. So the amount of the adjusting entry we subtracted, because we had a credit balance. When we said when we have a credit balance, we subtract, and that's why. Okay? So now we're going to debit bad debt expense. $11,500. We're going to credit the allowance for uncollectible accounts for $11,500. Okay. All right, now how is our accounts receivable going to be shown on the balance sheet? Well, we have receivables of $500,000, and remember, our current assets would always start with cash, and we would probably have some other current assets, right? But our accounts receivable are going to look like this. We have accounts receivable of $500,000 less the allowance. Now, how much is in the allowance at the end of the year? Be careful. It's not the adjustment amount, it's how much is at the end of the year, right? That's our ending balance, right? So want is equal to ending balance. All right, so that's what we end up with. So our allowance is $12,500. Okay, so the net realizable value of our receivables here, $487,500. Net realizable value, the amount we expect to collect. Okay. All right, so that is how you treat the allowance when you have a credit balance to begin with. Now let's look at the same situation when we have a debit balance to start with. Okay, so assume that the allowance, same situation though, the allowance has a debit balance of $500 at December 31st instead of a credit. Okay, so the required balance is going to be the same as it was before. Just going to copy that and put it here. Our required balance is still $12,500. But what is our current balance? Our current balance is a $500 debit balance. All right, so again, we want 12.5, we have 500. Let's go back to the T accounts. All right, so here's part two. So we have 500 debit. We want 12,500 credit. All right, so in effect, what do we have here? It's like a negative balance, right? This is an account that has a credit balance, but right now it has a debit balance. Why? What that means is that last year, we underestimated how much we would have in write-off. So we ended up writing off $500 more than we had estimated for. Okay, so now our adjustment at the end of the year has to bring us to 12,500. So how do we do that? First, we have to bring it up to 0, and then we have to bring it up to 12,500. So basically, you're going to add those two together, and we need to adjust 13,000. Okay, so if you take the 13,000 minus the 500, you're going to get your ending balance of 12,500. All right, so let's go back here. So our adjusting entry has to be $13,000. Our entry is going to be the same as before, bad debt expense. Remember, the entry is always the same. The amount is the thing that we have to figure out. 13,000, and then we're going to credit the allowance. And our allowance is 13,000. All right, now at the end of the year, what do we have on our balance sheet? Well, we have exactly what we had up here, right? We ended up in the same place. We started in a different place and we had to make a different adjustment, but remember, want equals ending balance, right? So our ending balance is 12,500. And our balance sheet looks exactly the same as it did in the other example. Okay. All right. So if you're studying financial accounting or you only need to know the balance sheet method, you could stop here. I'm going to take a look also at the income statement method. And that's another way of determining the amount in the allowance. Okay. All right. So remember that our adjusting entry has two accounts, the bad debt expense and the allowance for doubtful accounts. Every adjusting entry, remember, has affects an income statement account and a balance sheet account. Bad debt expense, remember, is an operating expense on your income statement. Allowance for uncollectible accounts is a contra asset account on your balance sheet. So the balance sheet method that we just looked at says how much do we want in our allowance, and that's what drives this journal entry. The income statement method says how much do we want in bad debt expense, and that's what drives the journal entry. Okay? All right, so when you're using the income statement approach, it's actually a little simpler, because what you do is you find the percentage of credit sales that the company estimates as uncollectible, and then you multiply that by the percentage of credit sales to get the amount of the adjusting entry. It ignores the current balance in the allowance. It ignores the current balance in the allowance. A little tricky, because in real life you do have to make sure that your allowance is a reasonable amount, but for now we're going to just ignore the balance in there. Okay? All right, so let's see how this works. Remember, we're going to have the same adjusting entry we had before. All right, so we have credit sales of $500,000. Credit sales. Okay? Credit sales. Estimated percentage of credit sales uncollectible, 1.25%. The accounts receivable balance is $72,500. Okay, so find the percentage of credit sales that are uncollectible. Well, it's 1, so let's say 0.0125, right? 1.25%. We're going to multiply that by our sales to get the amount of entry. So 0.0125 times 500,000 equals $6,250. Okay, $6,250 is the amount of our journal entry. Now remember what we said, we ignore what's in the allowance. We don't even know what's in the allowance in this case because it didn't tell us. But if you see a problem where it gives you the allowance, you don't care. Okay, you're just going to make the journal entry here. Okay. All right, so first thing we're going to do, debit bad debt expense. How much? $6,250. Whoops. Oh, geez. There we go. Debit bad debt expense, credit the allowance, $6,250. Okay? And that's all there is to it. There's no looking at balances, there's no debits, credits, nothing. You just take the percentage of credit sales that are uncollectible, multiply it by your credit sales, and that's the amount of your journal entry. So that amount goes right here. Nothing else to look at. Okay? All right, what do our receivables look like on our balance sheet? Again, remember, you're probably going to have some cash and some other current assets, and then we have accounts receivable. Our accounts receivable is 500,000. Oops. Less the allowance. And our allowance is 6,250. And the difference is going to give us the net realizable value, 493,750. Remember, that's our net realizable value. Okay, the amount that we expect to collect. Okay, all right, so here we covered the balance sheet method and the income statement method, both ways of using the allowance to account for your uncollectible accounts. All right, I hope you find this helpful in your studies. See you in the next video.